The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and welcome to today's broadcast on Parabolic Retracements. Very, very excited. Some of you may recognize the voice and the name. We were doing sessions last year, and over the holidays, we decided to take a little bit of a break, recharge, but we're back. So we're very, very excited to be releasing some of these informational webinars again. And again, today is on Parabolic Retracements. It's titled, When Out of the Money Makes Sense. And in today's current environment, this couldn't be timed any better. I wish we could say that we knew this was going to be happening, but it's absolutely one of my favorite strategies to trade, and my students like it a lot. And in the current market environment, honestly, this is one of the best things you could potentially trade in my eyes. I've been telling my students for the last few weeks that unlike what we've seen previously in the past, we are inside of what I would call a trader's market, okay? A trader's market, not a swing or a hold or an investor's market. It's a trader's market, and Parabolic Retracements is all about that. So before we jump in, obviously we need to cover the risk disclaimers and things like that first, so let's get that out of the way. First one is for Nadex, and trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and education purposes only, and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Now, trading can be volatile and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to U.S. regulatory oversight by the CFTC. Now, as far as the risk disclaimer goes for Keep Trading Simple, it's pretty standard. Obviously, no representation is being made that the use of this strategy or any system or trading methodology will generate profits. As you've seen before, past performance is not necessarily indicative of future results. Now, more or less this is the same. The biggest thing I want to highlight, only risk capital should be used when trading. That's standard across any trading platform. And obviously, trading securities is not suitable for everyone, okay? Biggest thing that I will point out, again, that is in both the Nadex risk disclaimer as well as the Keep Trading Simple disclaimer, is, again, guys, trading is not for everybody. Only risk money that you can stand to lose. Obviously, no milk money, no mortgages or anything like that. I don't want you guys doing that and coming back later. And one of the things that I will highlight at the end is if you guys do not have a Nadex demo account, and you guys see this and you guys are excited about this or as excited as I am, make sure you try this in demo mode first. Make sure that it works for you before you put live money on the line. All right, now with that being said, let's go ahead and jump in. So for those of you that don't know me, I'm the president and CEO of Keep Trading Simple. And my mission is really to help simplify trading for really the average Joe, and even kind of expand your horizons if you are a more experienced trader. I've actually been trading since the tech bubble. So my dad always told me, you have perfect timing, right? You want to get into the market when the tech bubble happens. Literally, markets went straight down. It was crazy. It was like, what just happened? So I've actually been through 2 major market crashes and have been trading the entire time. I started where many people did with stocks and options, and then I found currencies, learned futures, and what I've done is I've really taken all these things out that they told you that you had to do, and then really kind of put it back into a simplified form. I am one of those keep it simple type guys. I don't use a lot of the tools that other people use. I've created a trader's archetype system to really help people find what's best for them to trade based off their personality, their risk strategy, their time, as well as their money. And people would say I'm primarily a price action trader. I'm not a big indicator guy. I love looking at charts. I love looking at how candles are formed. So you will see that in some of my charts today. They're kind of plain, right? You may see a supplier demand zone on there, but that's about it. You guys don't see much more than that. I have created a couple different programs for Nadex, or that use Nadex. The 30-minute trader, a lot of people were very familiar with, as well as I have a 5-minute binary course and a couple other ones. I do have some advisor experience. I was a financial advisor for one of the big 3 banks. After that, I spent about 6-7 years traveling around the United States and Canada, teaching people really how to start trading the markets. But first and foremost, beyond being a trader, I am very, very proud that I am definitely a family guy. I have 2 twin boys that I coach lacrosse for, keeps me extremely busy. And then obviously you can see down there, I have a little girl as well. She's almost 2 years old. She's potty training herself now. She's walking around, and she's definitely daddy's little girl. So for me, it's just not about trading. I'm not a guy that sits in front of a computer for, 23 hours a day. I try to use technology and have it alert me when I need to come back. And again, 30-minute trader, 5-minute trader, I love these type of courses. And then again, I do broadcasts for my students at night. All right, so let's dive into Parabolic Retracements. That's who I am. Now, today's webinar agenda will probably take 35, maybe 40 minutes, depending on some of the questions at the end. What we're going to do is I'll define what I mean by what is a parabolic move. Now, you should probably know the markets have been absolutely crazy, up, down, left, right, sideways, all-time high, all-time low. It just, you guys get what I'm saying, right? We'll define what a parabolic move is. And then I'll discuss why we trade the retracement. Okay, so there are two different pieces to this. And again, news trading is very, very exciting. There's a pre-news strategy, and then there's a post-news. Today we're going to cover post, and actually in 2 weeks, not on Tuesday, but 2 weeks from this Thursday, we're going to have kind of the second piece of this webinar, which is actually the before strategy, the news breakout strategy. This is the parabolic retracement is after, and I'll explain why I think the after piece of it is just absolutely so amazing. It's something that many people miss out on. So I wanted to do this one first. I'll talk about when you can trade these, right? I'll talk about what assets you can trade them on, because there are many different ways to trade this. Again, we'll cover that section. And then why you would choose an out-of-the-money contract. There's a couple of main reasons why. And this strategy, although you can do it with other asset classes, Nadex, I think, is the absolute best way to do it because of some specifics that Nadex offers that the other asset classes don't. All right, so you want to make sure that you're around for that. Now, let's talk about a parabolic move. The best way, without giving you kind of a wiki definition, is what just happened? What? Oh my God, I'm looking at the chart and all of a sudden, bam, the price moves. That's a parabolic move, okay? It happens all the time. Today, if you guys were in the market and you did not know that there was going to be an interest rate cut of 0.5, I'm sure you saw the charts jump and you just were sitting there thinking to yourself, what just happened? How the heck did it move, right? So again, it's one of those things that you're going to see that move in. It gets a bit crazy. All right. Here's the definition. Okay. A parabolic move is an explosive one-directional move in an asset that is exponentially greater than the average move during that time frame. It'll often look like panic buying or selling and is most oftentimes associated with a major event like earnings or a news release. Okay. Now, some people may look at this and say, wait a second. How do I figure out what an exponentially greater than average move is during that time frame? Very, very simply, right? Very simple. Okay, platforms tend to have something called the ATR, the average true range. You know, that takes the average move during a specific time period. You could do it on the dailies, a 4-hour, a 2-hour, a 30-minute, a 1-minute. It takes the average kind of response, right? During that, the average move during that time frame. When you have a parabolic move, what happens is you are typically getting 2, 3, 4, sometimes even 5 times what the actual movement is during that time frame or what the average move is. That would be the definition of a parabolic move, okay? Now, here's what it looks like, okay? Now, these are charts provided by IG. If you guys are not familiar with them, they are a currency platform. Again, very, very beautiful charts. As you can see on the left-hand side, I don't know if you guys can see the mouse or not. It looks like you guys can, but you guys will see prices moving along, a little bit of a drop and moving along back and forth, and all of a sudden, boom, something gets set off and this launches itself forward. Okay, well, this was a news release. This was a little bit in the afternoon. Price popped and ended up running into an area of sellers. And then what happens? Boom, it immediately drops back down again and starts to retrace all the way back to the start of the move. So this would be considered a parabolic move inside of this time frame. Looking on the right-hand side, you kind of see the reverse situation. Instead of up, price is kind of bouncing along, kind of going down, some impulses, some corrections, a little basing, goes back up again. And then what happens? Bam, straight back down again, right? This entire move here of basically what 70 this one is actually only a 60 pipper. This one in basically an hour just skyrockets right to the downside. Huge move. And you can see these candles in here, these are some of the largest candles on the entire screen. What happens? Boom, we retrace all the way back up again. All right, so a parabolic move is typically associated with emotions. Okay, it's associated typically around something like an earnings event or a news release. Why? Because again, that's where emotions run the highest. So this is absolutely, without a doubt, a play on the emotions of the average retail trader. Okay. Now, obviously, let's talk current events here. Let's talk current events. All right. Here's what we had over this weekend. So one of my students actually, and again, I had this chart drawn from last Thursday night. They said, where is it going to end? Right? Because we had Monday, Tuesday, Wednesday, Thursday. It was going straight down. He goes, where is it going to stop? And I actually drew a zone for him and said it's going to stop when it comes down here. And Friday, price moved in, and then we went into the weekend. Again, it went all the way down. It's like it's going to be negative. And then how do we end Friday afternoon? Bam, it popped all the way back up again. Again, was this an emotional response, an emotional cause in the markets? Yes. Yes, it wasn't a news release. It was kind of a week of news releases, right? The coronavirus. And then we closed the market here again, nice little pop. And what did we hear over the weekend? Coronavirus has reached community level in the United States. Washington State declares a state of emergency. South Korea, 594 new cases, 16 now total, up to almost 3,000. None of this is good, right? Why did the market collapse down? Again, all this was bad news. These are all emotional responses, right? A lot of times we focus on an actual economic news release. And again, those are great. They happen all the time. This was one that definitely played on emotions, right? And what was the response after that? Boom, we popped back up again. And again, see this, guys? I hope you guys can see the cursor movement here. You guys see this green candle? This was yesterday, right? This was the largest move ever to the top side in the Dow. Largest one, right? We went all the way down here into this 24,750-ish range, right? All the way back up to 26,626. Huge, huge, huge move. And why? Nothing happened good, right? All we heard about was more cases. It's in the United States. It's in Florida. People died in Washington State. Yet the market went crazy and rallied up. Okay? Went crazy and rallied up. Again, that is the definition of a parabolic retracement. Taking advantage of large emotions inside of the market, finding an area where the big money out there says that's enough. Enough is enough. And then again, think about this. After 4 days down, how many people were going into Friday going, this is going to be the worst week ever in the Dow. I'm going to short. That's what a parabolic retracement does. You play on emotions, you find a good area where it reverses, and then it turns, okay? So that's why this strategy is one of my favorite. Now, why trade the retracement? Why not try to time it beforehand? I just mentioned that, hey, listen, economic news releases, we know those weeks in advance. We know that when those are going to come out, and you're absolutely correct. We do know, and that's a little bit different of a strategy. It is a little bit of a higher risk strategy. This one is a little bit, what I would say, a bit more on the conservative side, because we know, again, if the news release comes in exactly as forecast, nothing happens, right? No movement, no parabolic retracement, no trade, no risk, right? If you're not into the trade, you don't have any risk. I can say that, right? Now, if you're into a trade before, then obviously you're taking on risk. So what we're looking for is a couple different things. We want price to move here, okay? So again, part 2 of this, of why just trade the news, again, that's a little bit riskier. Let's start with conservative first. That would be the webinar in 2 weeks. Now, daily effects, great way to get news, right? So this is what economic news releases look like, okay? You're going to see the importance level. Now, you always want to make sure that you have a very high importance. Obviously, the small ones are not going to be market moving. You guys know that. And there's a couple things in here that we're going to need to see, right? A couple things we're going to see. You're going to have to know what the forecast is. It's always helpful knowing what the previous is. And again, then there's going to be the actual release. So this is just one example. There's many sites out there, and I'm not going to say that one site is necessarily better than the other. They all present information in a slightly different way. In this case, you'll see the forecast was coming in at 0.5, okay? It came in at 27.7. Huge, huge difference, huge, huge miss. Just like this at the bottom here. Look at this non-farm payroll. It was forecast to come in at 175,000. That's what they expected, right? New jobs. It came in at 75. There's a huge miss. Okay, you'll be surprised how many times the forecast does not miss the actual. Okay, every time you see one of these, that gives us a trading opportunity. If you're a busy individual and you work or you're commuting or you have kids and you're doing, going to school, it doesn't necessarily matter. You can know ahead of time when these news releases are going to be. I mean, I knew this weeks in advance, right? I knew it Friday, June 7th, 2019 at 8:30 in the morning. I knew that this release was going to be, here. And I knew what was going to happen here. I knew when these were going to be released as well. You can use your time to plan around that, and you don't actually have to spend a whole lot of time in front of the computer. It's a way to kind of use technology, all right? Now, you may ask, whoops, not that one, hit the wrong button. Whoops, when can they be traded? Great, great question, okay? I just given you economic news releases, but, when is the market open that we can actually trade these? Okay, fair enough. Let's talk about Nadex Forex trading hours. Now, I'm using Forex because economic news releases are typically associated with Forex, okay? That's where most of the releases are going to occur. Now, does that mean that it's only for Forex? No, absolutely not. This is something you can do on gold and silver and commodities. There's a lot of different ways you can do it, but these are the hours because, again, when news releases occur, the market's typically open. So you see New York is 8 to 5, then 7 to 4, 5 to 7. There are session overlaps. So a lot of these are happening, if you look here at the bottom, these session overlaps between 8 and 12 noon Eastern Standard Time. If you're a West Coaster, obviously you can do the math. This is before work, okay? My favorite personal time is the second one here, the Sydney to Tokyo one. I love trading Australian news. It's actually my most favorite parabolic retracement things to trade is that news at night. Well, from 7 p.m. to 2 a.m. Eastern time is when you tend to get a lot of the Japanese and the Australian news. So even if you're a stock trader or a futures trader, could you do this at night with currency? Sure. I'm not trying to turn you into a Forex trader. I'm just telling you, a news release is a news release is a news release. Take advantage of it. As well as if you're an early riser, trade London. A lot of news releases there as well. Okay, now will London and will Sydney and will those affect the U.S. indices? Absolutely. Do you think non-farm payroll affects the Dow or the Nasdaq or the S&P? Of course. Okay. So you may ask, what asset classes can I trade this on? Well, you can trade on everything. Forex, obviously, I've mentioned that already, right? You can trade it on Forex. There's a lot to do there, right? Economic news releases for every country. When the U.S. sleeps, London's open, Australia's open, Japan's open. China these days is obviously driving a lot in the market as well. If you guys have ever looked at the Australian or the New Zealand currency pairs, they are way, way down. Why? Because of the Chinese, because of the coronavirus, right? A lot to do there. Now, could you trade it on indices? Absolutely, right? When are a lot of the economic news releases in the morning? 8:30, 10, or 10:30, right? When are the most common reversals in the market? Just happens to be at those same time, right? Catching 8:30 news releases in the morning, you're able to take advantage of people that are there ahead of the market, right? A lot of emotions in there. Get in, set your trades, and then when the rest of the world starts reacting to it at U.S. market open an hour later, you can already have your position in, okay? Great way to do it, okay? Great way to do it. Do it before work, all right? Now, lastly, commodities. Oil inventory reports happen every single Wednesday. And I'll tell you right now, if you want to see where forecasts and actuals don't match up, that would be over in the commodities sector. I'm convinced that they have like a monkey throwing darts, darts at a dartboard. Even though there's a report that comes out on Tuesday nights before the oil inventory reports, or it's the night before, because sometimes it'll be Tuesday, Wednesday, and sometimes it'll be Thursday. It's still not right, right? The numbers tend not to match, and there tends to be large, emotional responses off of that. Okay, now could you do it with other things? Yeah, sure. Gold, silver, there's definitely other commodities out there as well that you can trade this on. Back in the day, we used to have some more of the agricultural options inside of Nadex, and maybe one day they'll come back. But like soy, corn, they were also great. There were certain reports that would move those as well. So it really doesn't matter. You can trade this on anything out there. All right. Let me show you another example. Okay, and this is one that actually, oops. Actually, before we jump into that, let's talk about why I'm talking about using out of the money contracts. And it really boils back down to one word. Okay, why use out of the money? Now, for those of you that are new to Nadex or maybe even trading Nadex, there's a big debate that happens with, do I want to use in the money? Because if I'm trading in the money, I'm already going to make money at expiration. Yeah, sure, but you're going to take something that, in my eyes, is going to be too high. Okay, there's and again, I'll tell you in the next slide, right? You have the highest, you have the most, again, the highest level of, it's a 4-letter word. It begins with an R and ends in a K, okay? There is an at the money, which is basically saying, I got about a 50-50 chance. If it moves in my direction, I'm good. If it moves against me, I'm kind of risking half to make half, right? You're risking 1 to make 1, right? That's okay, and you can do it that way. But what if you use an out of the money, okay? You obviously have a predefined risk getting into Nadex, but if you can take a smaller predefined risk at the end of expiration, that can give you a 2 times or potentially a 3 times or even more fold profit versus what your risk is. Okay, again, today's presentation is not really about risk to reward ratios, but if you don't understand those, again, I'll give you my email address at the end. You can email me and we can discuss that further. Okay, that's why I tend to use out of the money contracts for these. Risk. Risk is that 4-letter word. If you didn't know what it was, risk is what I was talking about. And here's why, okay? These are options contracts. You guys have probably seen these inside of the platform. Inside of the new beta platform, they are presented slightly differently. So these are based off the old platform, not the new one that Nadex has been putting a lot of work into to make better for us traders. So as you can see on the top over here, this is obviously on the indices, right? I mentioned before, it can be done on the indices. Now, the indicative value is very important. These were obviously from last year, right? Last July, these prices are obviously not where they are right now. But right now, the indicative was 30, 11, 25, right? So when you look across, look at the options, look at the actual different contracts, right? To find the one is at the money, it's right here, right? 11.25, it's actually right on it. You can see the bid and the offer about right around $50, right? 47 and 50. So if we thought this was going higher, it's got about 8 minutes left, right? This is only a 20-minute binary because it's ending at 220. If I was to buy this, I would take $50 risk, right? So say there was a news release about to happen. If I bought this contract, I'd be purchasing it for $50.50, meaning that at expiration, my profit potential, the most I can make on this trade is $49.50, right? But look higher up the chart. The offers get smaller and smaller and smaller and smaller the farther you get away. Now, this is obviously only 10 minutes left. There's not a lot of movement, but that's about half. That's 50% of the time here, okay? I'll kind of explain that in a second. The farther you get away from where the price is, the risk level goes down. Okay, now you say, well, wait a second, that could be a huge move, right? This is way far away. The chances of me getting this are slim to none. Maybe, right? Maybe. Remember I talked about using the ATR and finding levels of reversal? That's kind of what I'm talking about. That's where the little kind of hidden gem is, right? Let's jump down here to the currency, because remember I said I really like trading these at night. Now this is actually a late afternoon one, right? This is an expiration that's ending at 4, and you can tell by the strike prices these are about 6 pips apart. Okay, these are about 6 pips apart. But look over here. Okay, you can see this one has 2 hours left to go. This was, I believe, a 2 to 4 hour binary, right? Indicative value is 70.19. Now again, if you don't understand currencies, it doesn't matter. The indicative value should be the same for indices, or it doesn't necessarily matter, right? Like I said, I'm not trying to convert everybody. I'm just saying this is another example, an indice and a currency trade, right? As you can see coming across at 70.19, it's just a little tiny bit above this contract here, right? And it's a little bit, below this one, right? They're 4 pips apart. Well, how much is that going to move? How much could a news release actually move this thing? I mean, because you could say, hey, listen, I like this one right here. Look at this, $10 risk, which means, again, I'll round it. Let's just say it's 11. That means how much could I make? Well, at expiration, if price closes above 70.26, I can make what? $89, right? $89. But what does it need to do? If price is at 70.19, it needs to close it. It needs to move 7 pips in 2 hours. Well, what if I told you that the ATR is 8 pips in that time frame, in a 30-minute candle? That means it technically can move 24 pips in that time frame. And what do? We play on the emotions of the trade. You get a large spike up, you're able to find a nice reversal area. Again, everybody has different reversal strategies. I have the one that I like to use. You find that reversal, you took $10 risk, even if it just comes back down and, even if it comes back down just to where the price is kind of at the money, if you risk 10, what's the at the money pricing? 50. So I risk 10, right? That's $10. I had $10 risk, and then I basically sell it early. I don't even hold to expiration. You guys see where you can start playing with the risk to reward ratio? Yeah, hopefully the juices are flowing, right? That's what I'm saying. That's why out of the money gives us a little bit of a benefit, right? Now, could I position size myself and still have $50 risk? Sure, I'd buy 5 contracts, right? And man, if this thing blew through the top, you could make some great money out of that one. But again, remember, the first thing you should be focusing on in all of your trading is risk, risk, risk. Because anytime you take a position, you can obviously lose. Now I could say, hey, listen, but I could do this, Brian, right? I could take this one. I could risk $88.50. It's already above. It's only got, an hour to go. Most likely I'm going to win, and then I'll have a high, win-loss ratio. Who cares? Who cares about your win-loss ratio? You take one loser, you take one loser, and you've wiped out 10 winners in a row. Guys, it's about risk. Protect your capital first, and that's why I like to use out of the money for these, okay? Now, it does need to be combined. So here's an example that we had on February 14th. Okay, and again, this is kind of combining it all together, right? This is what I'm kind of talking about. Now, please don't think this is everything to it. Again, you got to have the right, understand about reversals and things like that. But if you guys are looking across, again, this is another chart provided by IG. They have a great system in there where literally, you can go in there and say, show me when the news releases, the highest level news releases are on the chart. And you guys can see this down here. You see the little calendar button right here? That little calendar button is telling me, hey, listen, there's some news right now. And what was it? Core retail sales, which is one of my favorite parabolic retracement news releases, right? You get a lot of emotional responses from it, okay? In this case, right here, you guys can see the forecast actually was the same, right? The forecast and the actual, but what happened is there was a prior adjustment that was bad for the US dollar, right? And again, if you don't know anything about currencies, the dollar's in the second pair. This is how many euros you get. You have a weak dollar, boom, it launches it. So what did it do right here? It launched it up, launched it, right? Well, we had this reversal right here, okay? This was the reversal. I went down and I looked at a 2-hour binary. Okay, now this over here does not match what the chart is. I don't have this the screenshot from that day as far as what it is. Whoops. Okay, but what I wanted to do is show you what the strike differential is in the euro. Okay, so as you guys can see, what I've done is I marked off this green box. This green box had movement of just under 21 pips inside of a 2-hour binary window. Here's what I'm talking about, guys. Now, again, remember, the prices are not going to match up, but the strike differential is the same. It was the same here versus what it is today. These are actually today's prices on the same 10 to 12. You guys can see they're 4 pips apart. So, with that being said, if they are 4 pips apart and this moved almost 21 pips, how many strike prices did it move? What's the differential in here, right? 5. It moved 5 of these windows, 5 of these, strikes down. Okay. You guys look at this last chart, right? What does it look like here? Again, this one has 2 hours to go. Here's the at the money. What does it look like 5 above? 1, 2, 3, 4, 5. You see the difference on what your risk level is on this one? Now, do you always want to take the farthest one out? Obviously, no. Again, there's more to it than that, guys. Again, I don't have time to, break everything down inside of a 35-minute, 40-minute window. But what I want you guys to do is understand the concept of this one. This is why we're using out of the money. It takes a little bit less risk. Now, if you don't have a reversal strategy that works for you, that, again, you're very, very confident in, that's a little bit different of an issue. That's not what we're covering today. I'm just trying to make sure that you guys understand that. But what we're doing here is we're focusing on how to find the nice kind of emotional responses in the market, matching it to the appropriate Nadex or their asset or duration, right? There are 5-minute contracts, there's 20s, there's 2 hours, there's dailies, there's weeklies. Again, there's end of days. There's a lot of different contracts in there. And some people are just so focused on the dailies, but there's a lot of really, really good contracts in that people aren't looking at, right? And in this case, again, was there an emotional response? Not to this, but obviously to the adjustments prior, okay? Yeah, pretty exciting, right? Like I said, the juices should be flowing. Do you try to get filled at the bid or the ask? In Nadex, typically for these, you're going to use, again, you're going to basically go in at a market. Most of the time, you're going to be watching these. You're not setting limit orders. You're going to basically go in for the market and buy and sell, and then the Nadex positions take care of all of it for you. All right. And again, when you're starting to talk about, getting, bid and ask, that's typically you're dealing with other things. With, again, going with market Nadex, it does it for you. It'll show it to you. It will actually show you what your maximum risk is going into it, as well as the maximum potential gain that you can get out of it. Like I said, if price gaps pass or continues to move, you can only lose what it costs you to get into the option. So it's easy. Bid and ask is more important when you're doing this in something like regular spot currencies or futures or anything like that. Nadex keeps it very, very simple, and that's why, although you can trade it on those other assets and be worrying about bids and ask and things like that, I don't want to kind of sidetrack the entire presentation today. Nadex will show you how to do this just going right in. Okay, it's easy. When you hit sell, go in for market at those specific prices when it matches what you're looking for. From my personal experience, when I try to use kind of limits and getting in at specific prices, this tends not to work as well. You will miss it by just a few pennies, and then you'll be mad that you missed the entire thing. Okay, if it matches it, go in quick, make your decision, and then again, if you want to put in working orders, one of the things, sometimes working orders get a little bit funky inside of Nadex. I think they're working on that as well. But like I said, don't worry about necessarily bid ask, hit the sell, get in there, and again, you be consistent, okay? Most of the time, and again, on my charts, I'm always using bid charts. I get that question a lot of times too, whether I'm using bid or ask charts. I tend to use bid charts more or less for everything, all right? Nadex keeps it extremely simple, and that's why this match is perfect. It's the limited risk aspect that I'm worrying about, all right? So just go ahead and hit the market. You are covered, all right? So hopefully that has given you guys enough of kind of mouth-watering kind of idea that, hey, listen, this may be something new for you guys to trade. And like I said, guys, these webinars, there could be 8 million questions. I could answer a whole lot in a row. I just want to make sure we stay focused. Now, you may ask, what are your next steps? Okay, like I said, this is not meant to be the end-all, be-all, all the education on there, but as far as the next steps go, if you remember from the beginning, if you do not have a Nadex demo, go get one, okay? You can go to Nadex, sign up for a demo, and you can start looking at these things. If you do not have charting software, right, Nadex does have charting software included inside of it, or go over to IG, right? Go over to IG US, and you guys are able to get the same platform that I just showed you. It's a beautiful platform, and attach those news events to the very, very bottom of it, okay? Go get a demo, okay? don't go out there and trade this live first. Make sure you're checking this out. And again, different assets. I don't have time to break down, what you would use in currencies and how far out you want to go, and for indices and for commodities and all those break down. But the first step is to go ahead and get a demo, okay? Next step for you guys as well, it's a resource that I've created for students. It's something that I gave out at the end of last year. Basically, what I did is I created a free report for you guys. The free report, again, you don't need a credit card, don't need anything like that, literally an email address, and it will send you a PDF file. I started compiling all the news releases for the major currency pairs. There's 8 different major currency pairs. I broke down the top 10 or top 2, top 3, depending on what it was, news releases that gave us the highest potential for parabolic retracements, and then broke them down talking about what the average moves are, okay? All you guys have to do is head over to nadex.keeptradingsimple.com and download that report. As I mentioned before, it's free. That's what it looks like. And again, that will hopefully assist you guys in the beginning, getting a little bit better at this. And like I said, it's currency based because that's where there's the most opportunity, but it doesn't mean you can't use the same type of economic reports for the Dow or NASDAQ, S&P, any of the major indices as well. And again, there's even some foreign indices that you could do it on as well inside of Nadex. So that's kind of a little bit added benefit. Now, the one thing that you guys will need, and like I mentioned before, I don't have time to cover everything in these webinars, is reversal strategies. There are numbers of different reversal strategies out there. You may have one that you like right now. As I mentioned, I have one that I use as well. I teach it to all my students, and obviously I do nightly broadcasts, and we talk about it there as well. But if you do want to get more information on those strategies, or have some some specifics that I have not covered, website is keeptradingsimple.com. You can find us on Instagram. I tend to post a lot of these, and some of them, a majority of them are, I do a lot of parabolic retracements, and I do some other different setups and strategies that we trade. Nightly, I talk about a bunch of different things as well. If you guys are on Twitch, it's a great platform. It's mostly used by gamers, but they have really great technology. So I use that as my platform to stream nightly at 9 p.m. Eastern. We do have a Discord channel as well that my students talk to, or we can do the old fashioned. You can just shoot me an email if you guys like. You like that, the old fashioned? It's not mail, it's email. All right. And I can handle those. So let me see. Is there any of them? Can you post the link here? I don't know that. Let me see if I can post the link in chat. I think I can. Let me see. I'll do that real quick. But like I said, you can write that. It's let's see. There's the actual link if you guys want to do it. I think I can do it here. nadex.keeptradingsimple.com. You should be able to hit it there. And again, it may give you you guys. Typically, you put the HTTP in front of it. That's just a simple link, but you guys should be able to type that in. Just copy and paste it. You guys should be good to go. With that being said, if there's any other questions, I'll hang around for a minute or two. Like I said, we like to keep these pretty short. It's not meant to be an end-all be-all. It's meant to provide a little bit of creative stimulation for you guys. And again, it's something that, like I said, it's one of my top 2-3 strategies. I absolutely love these. I mean, how many times have you seen a news release, got into a trade after news, after you saw it, and it immediately goes against you? This is really kind of meant to kind of teach you how to do that, right? How to take advantage of the emotions of the the general public out there. I always tell my students, your goal in trading is not to take money or not to beat the the best of the best. You're not out there to take money from the huge broker firms and the Goldman Sachs's and the Merrill Lynch traders and the your goal is not the goal is to take it from the person that doesn't know what they're doing, that uses emotion, that has no plan in the markets. It's like that old saying, you don't need to be faster than the bear, you just need to be faster than the guy next to you, right? Yeah, exactly. Do you like to touch brackets? Very interesting question. So I am obviously showing this on binaries. You can use the call spreads on this as well, okay? When price spikes, a lot of times it will take you out of the range of the call spread. So yeah, you can absolutely use it on call spreads. Touch brackets are a little bit interesting because there is no such thing as an out of the money touch bracket. As soon as the touch bracket top is hit, it knocks itself out. Now, you can get it pretty close, and yes, then they turn out to be very well, very, very good uses. But for the most part, because we like to use out of the money for this one, touch brackets aren't the best. Now, touch brackets are great for the other side of this. Remember, we're going to be doing the breakout strategy on next Thursday, not this Thursday, but 2 Thursdays from then. The touch brackets work very well over there, all right? Like I said, there's different asset classes, there's different durations, there are also different vehicles for this one. I tend to think, me personally, not to say that you can't, but me personally, I think binaries and call spreads tend to work better on this one because we can get our risk even lower than what we would be able to get inside of a touch bracket, if that makes sense, all right? Would like to listen to this again. How do you get a recording? Actually, LW, you're able to actually, Nadex records it, and I believe everybody's going to get an email from it. Otherwise, it's going to be posted on Nadex's YouTube page. So if you guys have YouTube, find this on YouTube. You can search Parabolic Retracements. If you guys are not following the Nadex YouTube page, go follow it. There's going to be my videos. There's going to be a number. Subscribe. Whenever you see a new video pop up, it will automatically send you an email. It's a great place to go back there and get it. As well, I think you can get it on the website as well. I think there'll be actually a recording or prior webinar link on Nadex's webpage. All right, but you should be able to get it. Okay. All right. If there's no other questions, guys, you guys are more than welcome to shoot me an email. And like I said, definitely make sure you guys get registered. I think the link just went up today. Not this Thursday, but 2 Thursdays from now, I'm going to cover the other side of this coin, which is how do we take advantage of the news before it happens, the news breakout side of it. And there's a couple different strategies we're going to mention then. All right. So thank you guys so much. I really appreciate you guys coming out. Hopefully, guys, will see me on the next one. And I hope you guys have a great trading day and take care.